Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. We're at a new place in this market. We've shifted down notably in terms of leverage from 6 months ago or so. I'm looking at supply, 6,645, and it looks like we're starting to see a tick up. Johnny, show me those charts.
That is a tick up. That's the first tick up we've had in, really since July, 10 weeks or so, up 4.2%. And supply now is right back on track with where it was last year, 2021.
Yeah, and I think once we get into the weeklies, we're going to see what's going on over here. And this is what is supposed to happen this time of the year. So expect more of it. Let's shift over to demand, Johnny. I'm looking at pending sales, 3,297. That looks like it's accelerating on the downside. Show me that chart.
Yeah, it's down 3%, and really, it's still not a surprise. Pending sales is lagging. It takes time for those contract signings to get into that mix. So it's ticking down. You expect it to tick down as summer ends. It's really not going to start ticking up until the buyers have been out, had a chance to see the new stuff, and sign those contracts. So we're probably going to see another couple of weeks of declining numbers in pending sales, but I do expect it to start ticking up toward the end of September, early October.
Yeah, it's amazing to watch this thing fall. The COVID down, the recovery. I mean, we went down so low, we went up so high, and now it's kind of regressing to its natural averages and its natural ranges, and we're seeing it in real time. And as a result, the market pulse is falling. But I will just say that this is what's supposed to happen this time of year. So you have to think about the seasonality element in addition to the macro element, which, in my opinion, that macro shift already has taken place. And now there's a seasonal element kind of doing its thing for another couple of weeks. Johnny, let's go to the weeklies. I'm looking at 1 week supply, and right there it is, the last 3 days, 479 things. Show me that chart.
Yeah, and that's a huge pop. And this is what you normally see right around after a week after Labor Day or so, you see a big pop. The difference between now and what we've seen previously is, honestly, no, this is a weaker pop in supply than we've seen in the last few years. As you can see on the chart, it's noticeably lower compared to 2021, 2020, even 2019. So I'm not sure if there's more to come. Usually what happens is you get that first spike after Labor Day, and then it's, each spike after is successively lower. So we'll see how this shakes out.
Okay, yeah, we'll definitely keep an eye on that. We definitely need more inventory. Let's go into the weekly pace of deal volume. 118 things, that's down notably. Again, this is the time of year where that is supposed to fall, as September is our lowest deal volume month of the calendar year. Johnny, show me that chart.
Yeah, I mean, it was a holiday week, right? So you're missing Monday. That just didn't happen, right? That was Labor Day. The weekend before, a couple days after that, people getting back in the swing. School starts. I could throw a number of excuses your way as to why this number is low, but it is low. It's the lowest number of the year, down 38%. But again, first the stuff comes on, then the buyers come out, and we're going to see that number tick higher undoubtedly once September gets underway here.
Yeah, exactly. And it looks like that stuff's starting to come on. And you know what? I like to look at 1 month. And when I look at 1 month deal volume and I see 756, and I expect this to fall over the next coming weeks, we're supposed to end the month in the high 600s. That's our historical average for deal volume in September. So again, I'm looking at where we are, and everything going on now is supposed to happen the way it's supposed to happen. That macro shift already occurred. That was at 1400 back in May. And that came way down, and that's that macro shift. So back to normalcy in terms of deal volume. Let's shift. Let's pivot to the chart of the day here, Johnny, and let's go to closed sales action, right? So we're going from real-time stuff to the lagging closed data, and let's take a look at that spread, that listing discount from original ask, from last ask. Is it starting to show the downturn in terms of what buyers are getting for negotiability? Johnny, what do you see here?
Well, it certainly is, right? I mean, the shift happened, really started right mid-April, and that, of course, is when the low of the discount from last ask and discount from original ask happened, right? April. They started ticking up after that. I think the last bar we should really focus on here is June. That's the one with the least number of sales, the most number of sales to kind of qualify it as filled enough. But you can see that trend is rising, and you're seeing that also in some of the early look that we have for July. That trend is continuing. But it's a very early look in July, but it seems like, despite the hand wringing and the shift down, honestly, Noah, if you're looking at discount from the original ask and the latest reading is 3%, it's not bad. You look back to 2020 numbers. Right? Even June, July of 2021, it's lower than that. So yes, there's been a shift, but it's not that bad.
Yeah, and you know what? You look at these kind of numbers, I can't help but just take a look at the pandemic highs of this negotiability, and you got into the eights and the nines as kind of like the fear level of negotiability for our market. And I guess we're kind of halfway there at this point. I do not expect to get anywhere close to that. We've said before, if you found yourself getting a 6, 7, 10%, 8% discount from wherever we were 6 months ago, I think you did quite well. Because I don't think the median of the market is going down that much. In fact, sellers are coming off market. That was a big driver of supply down because they weren't going to get their bids. So yeah, this is going up. July's a little early. So yeah, I don't want to just put too much weight into that number, but I would expect this trend to go up, and probably in the 4 or 5% range. It's probably going to end up. We have to remember this is a backward-looking indicator. So this is really showing us data of what was signed and sealed and delivered months ago, and not necessarily what's happening right now today in the market. So if I'm a buyer trying to use this chart to time the market, that ain't going to happen, and that's gonna work against you and be misleading. You definitely want to look at contract activity, and that's why I think right now buyers should be opening their eyes big time and looking at what's going on in this market before the wave of competition comes in October and November, or if it doesn't come, we'll see. Because at this point, John, we can go either up, stay in the same range, or go down. Now that we've shifted, right? It's one of those three.
Yeah, and this is September. We're gonna have quarterly reports coming out in a few weeks, right? The end of the third quarter. And what are they going to be showing? Well, they're going to be showing what happened, sort of the early part of that shift, right? Some of those numbers that are, since it's sales based, some of these numbers aren't going to start filtering in really until fourth quarter. So when you start looking at what's happening in price action, the third quarter report is going to be a really early look. It's going to be a partial picture. So that's going to be an interesting thing for how buyers are going to perceive this market.
Yeah, and here it is. Here's your early Q3 look. You're going to get these reports in about 3 or 4 more weeks. And what I like to look at is median price per square foot. I'll look at average price per square foot and look at them. Quarter to quarter, they're down about 1.5%. I'm seeing some merging, some converging of these numbers. It's giving me a higher degree of confidence in that number. So we're down a couple of basis points from last quarter. If I look at average sales price, down 8. If I look at median sales price, down 6. I prefer median sales price. So I mean, this first leg, I like how you described that, Johnny. This is leg 1 of the day. We do not have the data for leg 2 and leg 3. That's going to come later. It looks like this first leg is showing the market down, I don't know, 2 to 5%, 2 to 5%, something like that. So it's a good indication of where we potentially are right now, but we have to wait for that data.
Exactly.
Thank you, John Walker, for pulling up all of this data. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, if you guys got questions, we have answers. We have our forum right down here. If you want any of the reports that John whipped up today, it's going to be right over here in just a few moments. Other than that, this has been your weekly Manhattan market update, and we'll catch you next time.